Hi everyone, I'm Tom Wilson from Racing Squared. We're a bloodstock analytics company, and we focus predominantly on the yearling market and 2-year-old markets across Europe, the US, Australia, and New Zealand. Just a short kind of review and deep dive into the market dynamics of the European yearling market that we've observed so far in 2024. We're kind of coming to the conclusion of the yearling sales season in Europe. I think there's only 2 more sales left to go, the Arcana yearling sale in November and then the Tatsal's December yearling sale. So it's a pretty good kind of time point in terms of doing a bit of a review of the dynamics that have been happening in the market. So far in Europe, we've seen kind of 6,784 yearlings offered at sales since Arcana August. If you look at clearance has been pretty good. So there's 5,741 that have kind of achieved a sales price in the ring. So clearance stands at 84.63%. What we have observed, though, is a dynamic that people seem quite happy to be able to get out on yearlings, knowing that particularly in the middle and lower parts of the market, it's a challenging economic environment. One figure that we track is the yearling sales price achieved above the kind of published service fee of that sire, kind of at the point of when the kind of the breeding decision, or at the point of when the foal would have been conceived. And if you look at that, only 3,825 yearlings of that 6,784 actually returned a yearling sales price above the service fee. That doesn't even include keep. So you've got like 56% of yearlings that have only returned the sales price above the service fee, which is a tough kind of financial return. And we'll see later on as we step through the kind of different sales and the different price brackets, why the upper parts of the market, as per the last 12-18 months, continue to be strong, but why the pinch is really felt at the middle and lower parts of the market. If you look across all sales, the average sales price in euros was 81,474, with a median of 29,000. In pounds, the average sales price was 69,953 pounds, and the median was 24,600. And that's why it's important to use median as well. You see, like the distribution curve of like yearling sales prices would kind of have significant kind of spikes and outliers at the top, and that really skews the average. So generally, we like to use median in terms of market analysis. Looking across kind of the distinctions per gender, males sold marginally better than females so far this year. So kind of clearance was 85.38% for males versus 83.8% for females, probably because breeders are more inclined to hold on to fillies if they think there's perhaps a kind of a breeding potential there. You also see the price distinctions there as well. So in terms of like the median price, sale price return, 28,700 pounds for the colts and 21,320 pounds for the fillies, and versus that market average of median of 24,600. So colts slightly more popular than fillies from a commercial perspective. Looking across all of the sales, so what we do is we kind of catalog all of the yearlings across each of the major yearling sales. Yeah, I've got all of them in there, maybe apart from a couple of yearlings that were at BBAG in October. There you can see the clearance rates in terms of yearlings offered and catalogued, sold, and kind of then the percentage sold, and also the percentage sold above fee. What we observed is a very clear distinction between the elite yearling sales, which would be Arcana August, Goff Sorby Book 1, Tats Book 1, Tats Book 2. Clearance was high 80s, 90%. That return of sales price above service fee was also good. It was like high 70s to 80%. You then see it drop kind of markedly and distinctly for the middle market. So the Goffs Premier, some of the Goffs Autumn, some of the Irish sales. Tats Ireland held up really well, which is very, was very strong. Tats Somerville was probably kind of more in that kind of weaker middle market kind of banding, but there you're seeing maybe like 70 to 80% clearance rate, but a 60 to kind of 70, mid 60s kind of sales price above fee ratio. So it's just an indicator that it was distinctly tougher in the middle market. We maintain something called a profitability index. What the profitability index is, it looks at the ratio of returns, so the profitability on average price versus stud fee. And we do that on a sire basis, but then we also kind of aggregate it up on a sale basis and a consignor basis. And so what you're looking there is kind of units of return or units of kind of multiplication in terms of the stud fee into the sales price return. So of course you want to see an investment there, but what we also incorporate is the clearance rate as well. So we use clearance rate as a kind of percentage in a ratio, also like a profitability ratio, which is the stud fee into the average sales price return, and that then gives us a profitability index, because you want to achieve both. You want to be profitable, but you also want to be able to clear the stock out. So we punish sires, sales, consigners that also aren't kind of below market average in terms of clearance as well on that metric. I mean, what we observed there, again, it's the same dynamic. You've got book one, book two, Arcana August with a high profitability index. The average return per yearling was best of book one. So you saw a kind of an average profit per yearling of 241,000. And a median return of 139,000. I mean, that was significantly the highest. Next, you then got Arcana August with an average profit of £85,000. Everything's converted back into pounds for analysis, but we do maintain it in euros as well. And then 51,000 median profit per yearling at Arcana August. And you can go to book two for the third position, 60,000 average profit per yearling and 32,000 median profit per yearling. None of this includes keep. So what we then do kind of post these metrics is also adding keep. So imagine we use £15,000 keep in terms of cost from fall to yearling and kind of getting them to the sale. People might debate whether that's the right figure, but I think there was a PwC report that was capturing something on that a couple of years ago. So we use that. So you also would then adjust kind of post these metrics to even calculate a true profitability in terms of end-to-end financials. But yeah, the elite sales, the strongest and harder and more difficult in the lower middle market. I mean, you see there the median profit and loss per yearling. When you took a key off some of them, you're certainly in kind of negative returns overall. So it was a very, very tough market. Looking at sire profitability, it's probably not a surprise, but Havana Grey was by far the most profitable sire. I know sometimes this isn't that viewable, so I'm going to zoom in. In fact, I'm going to go to our raw sheet here so we can look at it properly. So if we look at Havana Grey, so 92 yearlings offered, 77 were sold. And let's freeze that column as well. Decent clearance rate, but that was about market level. Clearing above fee a lot of the time, 81% of the time. There's the kind of average prices. That's euro, average in euro, median in euro. That's average in GBP and median in GBP. Against the 6,000 GBP stud fee from 2022. So these yearlings were kind of conceived before that last fee kind of uplift for Havana Grey. I think it was £18,500 in 2023. So I mean, it's almost a once in a generation opportunity or return to get into Havana Grey with the on-track performance statistics and also these commercial statistics at a fee of £6,000. But yeah, it's just a distinct spike, and anyone who made that decision did very, very well out of it. So you were making, on average, you were making £62,000 per yearling and the median profit per yearling of 29,000. So like the profit ratio of kind of dividing that into the stud fee into that is 10.4, and the profitability index, which is the profit ratio times by the clearance rate, 7.41. So it was like just a significant outlier against the rest of the market. Territories is very interesting because Territories has just been shipped off to India, but was a real good commercial proposition for kind of mid-level breeders. £10,000 stud fee, was returning an average yearling sales price of what's just a shade below 59,000 GBP and a median of 20,000. And even if you took kind of the difference between that and the keep, you're still making a little bit of money per yearling. So yeah, and with a decent clearance as well. Yes, so clearance was up at 87%, nearly 88%. So Territories was doing very well for breeders commercially off the £10,000 fee, and now he's gone. He's in India. The other one, the angle that you kind of trying to need to find is the next hot 2-year-old sire. So Sergei Prokofiev, Sioux Nation did very well. Obviously Havana Grey's done very well. You want to, and certain looking at the kind of the next crop, Al Ali maybe in Space Blues are ranking quite highly. But the art of the game, it seems a little bit at the moment, is to find early, is to get in ahead of the curve on finding the next hot 2-year-old sire. So Sergei Prokofiev had a good first year with these yearlings on track. So off the £6,000 fee, I think it's up to 8,000 now, which still is commercially viable based on these numbers, and still gives breeders some wriggle room to have a good impact commercially, but was returning an average of 34,644 sales price and a median of 20, what's just a shade below 23,000 BBP. So that, and the profitability index was good. So it was a profit ratio plus a stud fee of times by 4, and the profitability index was 34.57 when you incorporate the clearance as well. Study of Man had a good year on the track. And then I think you kind of get to a bunch of sires that are just like the elite sires that have reliable returns. And like, if you've got a mare that's good enough and you've got enough money for the service fees, so there's almost like a bit of a lost middle. Like if you're not a hot 2-year-old sire, or if you're not a really proven elite sire, it's a bit of a wash, to be honest with you. So I mean, like Zarak is becoming incredibly proven and kind of stakes winner, a runner, stakes winner, a foal, group winner, a runner, group winner, a foal metrics are through the roof. Nathaniel's been very solid, on track for a long time, and has been kind of commercially reasonable. It was a 15,000 service fee here. Two Down Hot is obviously the next hottest sire in the world. Champion sire, 2-year-old sire in Australia. It's been through the roof here. Blue Point's not far behind. Night of Thunder's incredibly proven and reliable now. And that's kind of when we do look at profitability index, because we're using fee there as well. If you just look at, like, say, let's look at the average price return. So like, so we should look at the average profit, but like average profit per yearling, Frankel was bringing in 33,000 pounds per yearling profit to buy with £245,000 average profit per yearling. See the stars, Wootton Bassett. Like, look at these, like, it's just the established elite sires. So you either have to be investing in the established elite sires that are proven and will continue, well, nothing's a guarantee, but look like they continue to do that, or you have to find ahead of the curve the next hot 2-year-old sire. If we go then a little bit to the consigners, consigners were very interesting this year. Lodge Park stud did very well. I think they've now got the kind of highest ever selling Cull and filly at book 1, but they had the 4.3 million guineas Wootton Bassett on Thursday of book 1. But their metrics were like good overall. So they offered 25 yearlings. They sold 24 at 96% clearance. 20 were above service fee. That's 80%. I mean, of course, the average is massively spiked by that 4.3 million guineas Wootton Bassett. But so the average profit and loss per yearling was 221,000 and a median of 20,000, like profit ratio of 12.3 and a massive profitability index. Grangemore Stud did really well. They sold 22 out of 24 at 91.67%. Their profit metrics were really healthy. So 182,000 average profit and a 44,500 median profit return per yearling for a kind of profit ratio. So their average stud fee was 27,500. So they returned kind of really healthily. Ballyphilip did really well. They had a lower than average for the kind of the top four, 14,000 average stud fee. They were returning an average yearling price of 103,000 and a median yearling price of 24,900. Trade wins continue to be very good, both at yearling sales and the 2-year-old sales. New Sales Park had the highest average return per yearling at 237,000. Incredible breeding operation, 36,000 median profit per yearling. Cardiff Stud had a very good median profit per yearling, as did Ballyver and Mountain View. So it was a tough market, but a number of shrewd consigners still did very well and kind of managed to punch above. But our hypothesis coming out of the yearling sales this year in Europe is there's two main angles to play. Play with the elite reliable sires that continue delivering reliable on-track returns and commercial returns, or find the next hot 2-year-old. Everything in the middle is a bit of a wasteland, to be honest with you. Hopefully that was useful, and you can find us at racingsquared@gmail.com.